Hello, aspirants. Today we are going to discuss a very important topic for management student that is called working capital management. I think all of you are aware capital is one of the important part of any business. And usually capital is divided in two part. First one is fixed capital and another one is working capital. Fixed capital means a part of capital which we are using for long-term investment, like land and building, plant and machinery, furniture, infrastructure. So that is useful for a long period, maybe 10 year, 20 year, 30 year, like that. So one portion of the capital which is used for investment in long-term assets, it is called fixed capital. Another very important part, working capital. Working capital is a part of capital which we are using for day-to-day business activity. For example, purchases of raw material, purchases of consumable items, payment of salary and wages, rent, electricity, and etc. So a part of capital which we are using for day-to-day business activity, it is called working capital. Working capital is very important because it is a circulating capital. Same capital we are rotating, we are using again and again within the financial year. That means if there is a shortage of working capital, you are unable to pay salary and wages for your employees. You are unable to pay amount to your creditor, those who are supplying raw material. So that is why in day-to-day life, working capital is very important. Many companies, they have enough profit, but because of poor working capital, they have a lot of troubles. Like they are unable to pay salary, they are unable to pay their amount for raw material. So in future, they are not getting raw material on time. Again, this concept is divided in two important areas, gross working capital as well as net working capital. Gross working capital is a very broader sense. When we are taking only the total of current assets of a company, that is called gross working capital. Many companies, they are using this concept because ultimately entire current assets they are using for day to day. For example, inventory, cash, bank balances, debtors, small loan and advances given to employees or other people. All these are the part of the current assets. So total of all these assets, it is known as gross working capital. Another very important aspect is net working capital. Net working capital, basically, it is a balance sheet concept. Current assets minus current liability. So the moment your business is a running business and you are able to calculate your total current assets and total current liabilities, so difference will be known as a net working capital. So whenever we are talking about working capital, main concept is net working capital. So most of the companies, they are using net working capital as a parameter. Another important classifications, for example, on the basis of time, there is a permanent working capital. Permanent working capital means whatever fixed expenses of a company like salary, rent, electricity, fixed expenses. So a portion of working capital which we are using for all the fixed expenses of every month, that is called fixed capital. Again, fixed capital is divided in two parts, regular working capital and reserve working capital. Regular working capital, as usual, every month, whatever your fixed expenses, for that we are using this capital. Reserve working capital is a different working capital apart from your day-to-day requirement. 10 to 20% of working capital, as per the nature of business, companies they are keeping reserve for some contingencies. None of the business they are only using capital for their day-to-day work. Some money, some amount, some fund they are keeping reserve as a reserve working capital. At the same time, another classification is temporary or variable working capital. So Temporary or variable working capital depends upon your production activity. When your production is larger, you need more money for raw material, salary, consumable item, etc. So that proportion of capital will be known as variable or temporary working capital. Another way it is divided into seasonal working capital and special working capital. Seasonal working capital means a part of working capital which you need for a particular time. For example, in India, sugar industry. Sugar industries are only seasonal factories, seasonal industry. Normally from October to March when sugar cane is available, at that time only production is there. So in 5 6 months they need more money in a form of working capital. This is called seasonal working capital. The moment off season came, they need a very minimum amount as a working capital. And special working capital is a part of capital which we need for a special purpose. For example, if a company is using generator for power electricity, that means as a backup. So for that generator, you need suppose 1000 liter reserve diesel or petrol, and for that, you need 50,000 rupees more as a working capital. This is called a special working capital. So, when we are talking about business, this concept is very important. And nowadays, much more companies they are focusing on management of working capital. Thank you.